All right. So we're back with another review, and this time around we're reviewing what? We're reviewing a GBPUSD trade that we took on Monday, the Monday for the CPI week. And I'll try and put the day stamp on the title so you can study this price action at your own time in your own charts and probably learn further or learn more into it. So without wasting any time, let's dive into the charts. So like we always do before taking any analysis or making an analysis on uh, our particular pair or the pairs that we'll be studying or any pairs of interest, we need to be looking at the direction of the dollar index, right? So we need to study the dollar because it is very influential in terms of the movement of the foreign currencies, right? So in this focus here that we made on Sunday as our team, what we did was we came up with the fact that price is trading into what? It's traded into the CB last week and respected it, this weekly CB level. And we are most likely to see what price trading away from this area to attack what? Sell side here and probably sell side right there. So we're coming from an imbalance to a liquidity pool here and another liquidity pool right there. So there's a strong draw on liquidity. As you can see, we have this relatively called lows or this smooth, clean level. So it is bound to attract what? Attract price to it. So without analyzing our GBP USD market, right, we already have a strong bias for GBP because we said if dollar is going lower, then foreign currencies should be going higher. It exerts pressure rather on foreign currencies to trade higher. So we already have what? A bullish bias on GBP USD without, listen to this part, without opening the GBP USD chart. So let's look at the lower time frames, which is the 4 hour for the dollar index, so you can get an understanding of why we thought or we think that dollar would be trading lower for this particular week. So right here we have our change in the state of delivery right there, and then price left behind the CB on the 4 hour, right? There's a 4 hour time frame. We left behind the CB, and on Monday, as you can see, price respects that CB and then trades lower, potentially are taking what? Sell side liquidity resting right there. So this is what we was using. And before I dive into the GBP USD trade, we need to confirm if whether the GBP between GBP and Euro USD, which one was bound to be traded for a much stronger pair between them, right? So by doing that, we need to look at what? We need to look at Euro USD and GBP and compare them, right? So as you can see on this Discord discussion here, we said SMT with GU, with EU, right? So GU is stronger, good for buys, right? And I'll get to explain this part once I get into the Euro USD chart in a moment. So right here we have Euro USD weekly. So we trade lower into what? Last week we traded lower into this order block. We failed to close above the opening price of the order block. So still we're expecting what? Bullishness on Euro. And then on the 4 hour, we have what? We failed to make that change in the state of delivery. But still we leave behind what? We leave behind a BC. So right here, what happens on Monday? Monday we trade lower into that BC and then we try to expand higher from that before our BC level. Now, where's our SMT divergence? So as you can see, there's a low and a high and a lower low right here, right? So Euro USD is making lower lows right at this point in time, while GBP USD is doing what? It's making a higher low. So there's an indication that GU is much stronger in the sense that it is failing to make lower lows, right? It's much stronger than EU, so you should be buying on strength, which is on GBP USD, right? And you might be wondering why I labeled this as a change in the state of delivery. Well, the logic behind it is that since we are bearish, right? And then we start disrespecting this bullish bearish array, right? In terms of a fair value gap. Then once we close above this fair value gap, can we not use that as a change in the state of delivery the same way we'll be using a close above an order block or a close above a breaker or a mitigation block? Yes, we can, right? We can use that same ideology provided we are at a key high time frame level, right? So changing the state of delivery in the form of closer above this fair value gap in the form of a CB. So we come back into that area, we can use it as an inversion level, and we have fair value gaps overlapping. So strong area for buy. So you can incorporate this into your trading for any other time frame, right? If you don't get the change in the state of delivery right here, right? Or right there. There's a change in the state of delivery in terms of an order block if it closed above these two consecutive down close candles, or we close above that two up close candles right there in a form of what? A breaker. So you can still incorporate that and maneuver around price because it's not always going to be in black and white. Now let's get into it. Let's get into our main focus, which is the GBPUSD, right? If you look at the title here, we said the annotations mentioned that we respected the order block, the weekly order block level, right there, so we can see what was failed to be achieved on Euro USD is being achieved on what? GBP USD. Close above what? The opening price of the order block. That is what we get on GU. So it's pretty much a good indication that GU is still superior than EU in this case. And on the 4 hour, what do we get? We get, like I said, a low, a high, and a higher low, right? So there's an SMT divergence while Euro USD made what? A lower low right here. So there's a strong indication of what? Strength on the GBP USD. So right here we leave behind what? We leave behind a 4 hour BC. So what do we do on Monday? On Monday, we trade all the way into that BC level, into the order block, and we try to attack what? We try to attack the buy side delivery right here. In terms of this liquidity pool, we're coming from an imbalance to a liquidity pool right here. The same thing that is happening where? The same thing that is happening on the weekly time frame from an imbalanced internal range liquidity pool to an external range liquidity pool right there. So let's dive into the 1 hour time frame to see what really transpired in terms of us as we were trying to execute this particular trade, right? So if you look at the price here on Monday, what do we do? This is Monday the 8th, right? On Monday, what do? We trade lower into what? The 4 hour BC, trade higher. What did I say about not waiting for price to close above or your order block or your breaker? You can use a fair value gap, right? Once we get a close above this fair value gap, what is that? That's a change in the state of delivery. We come back into it, we use it as what? An inversion level, right? Come back into it, we initiate what? Buy side delivery or buy side order flow. We're disrespecting bearish order flow and establishing what? Buy side order flow. And as you can see, we leave behind what? An order block. Once we come off this inversion level, we close above that order block, we come back into it, and then we trade higher. Now, what do we also see? We have a dealing range here from this high to this low. We can mark out equilibrium right here, mark it out on time, and you can see how the bodies are closing just slightly above the equilibrium point, and price traced all the way into the discount of the range. It's 6 discount before attacking liquidity residing in the premium of the range. ICT core content, I think it's month one if I'm not mistaken. So right there you can see how this uh, basic concepts come into play. You don't need to overcomplicate nothing. So let's get into the 15 minutes to see the trades that we took. So we had our midnight opening price right here, price trade higher, and then we trade lower, forming the law of the day. What does this do? It forms the law of the day during London kill zone. So if you are forming the law of the day during London kill zone, what is this entailing? We're most likely to see what? Classic buy day template, right? London forming the law of the day, New York retracing, and then we see what? Expansion to the draw on liquidity for that particular day. Retracement most likely to happen where? During New York kill zone. So retracement in this case become buying opportunities. And as you can see, as we was trading into what? As we was trading into that 1 hour fair value gap, inversion fair value gap rather, we see what? A high resistance liquidity run in the form of price taking out sell side liquidity. High time frame bias is what? Bullish. We're taking out what? Sell side liquidity or stops against the high time frame bias. So there's a high resistance liquidity run. Once price comes back into this order block, you might be buying that, or once it comes back into this fair value gap, you might be buying that. And when it's your stop loss, right below this low. Why? Because you're trusting it not to be taken out because it has already taken sell stops. The bias is what? Bullish. We've already taken sell stops here. We don't need to trade lower than this again, right? And then what do we do? Come up this fair value gap right here, push higher. We leave behind an order block. We come back into it during what? New York kill zone, right? That's all happening with the New York kill zone. Even if you use 7 a.m. to 11, it's still fine. It's very subjective to the trader, right? So I prefer to use 8 and 12, but I'm very much fluid in terms of the approaches that I'll be using based on the price action that I'll be dealing with. So right here, this is the entry that I took right on this order block. I didn't like this one just because of my own preference choice. So we have a buy on this order block, stop loss right there, and the target would be what? This would be the last TP. Where are the other targets? We have a swing, a failure swing here. We have another failure swing here, right there, and you see on the hourly that, let me go back to the hourly. On the hourly, we had this failure swing, and we had that consequent encroachment of this week as another potential partial point. You'll understand once you see how I was exiting or I was managing my trades, right? So right there you'd get that stop loss would be 7 point something pips. Not really an issue of concern. I don't really vibe with stop losses a small range stop loss, but as long as the price action is aligning, then I'm content with taking the trade as it is. So right there, you'd be getting 1:8 risk to reward ratio. Not that it's something that I look up to, but I'm looking for the low hanging fruit. So that consequent encroachment of that 1 hour week would have been what? Oh, not that would it would have been, but it was right because of the trade that we took. It was the last point of interest for me because I was not really expecting price to trade all the way there. If it did, then that would have been a bonus, right? But anyway, let's look at the 5 minutes. So the 5 minutes, we have another high resistance liquidity run, trade higher, leave behind an order block, come back into it, right there and right here. I bought on this fair value gap right there because I thought this order block had been retested, right? I bought on this fair value gap. Stop loss is still on this high resistance liquidity run, HRLR right there. And then I took partials above this relative equal highs right there. It's too clean. So when price came back for a retracement into this fair value gap, I bought more into GBPUSD and I didn't even bother moving my stop, right? And you can see how down close candles are supporting bullish order flow. You can see how down close candles are supporting price higher, and you can see as we go higher and higher. And there's a zoomed chart of the 5 minutes delivery. Come back into the order block, trade higher, left behind an order block, come back into it, order block, come back into it, and just falls shortly a few pips off what that 4 hour swing high, right? So let's look at the deliveries, right? Let's look at the executions rather. We're trading within this 5 minutes fair value gap right there. And why was I anticipating that uh, price is most likely to trade lower instead of putting my stop loss closer to this area? There was that 15 minutes order block, right? Don't forget this, that 15 minutes order block that was residing somewhere around here, right? So I needed to incorporate the fact that price might just trade all the way into that 15 minutes order block because it takes precedence over a 5 minutes point of interest. So price traded into the 5 minutes fair value gap. I bought into it, as you can see, and then, like I said, I took partials right there and bought again on that 5 minutes fair value gap. Stop loss is still unmoved, right? As you can see right here, I left behind that allowance for price to trade all the way to that 15 minutes. Let me go back to the 15 minutes. This 15 minutes order block right here, right there. That is the one that I was letting price rather trade all the way to. So once we got that, what did I do? Look at the exits. So right here, I'm exiting above what this swing high on the hourly, another exit on the swing high on the hourly, another exit on the consequent encroachment of this week. It's a premium week. So once we exited there, I left a runner to say if we go above this old high, then I'm pretty much okay with that. If we don't go above that old high and retrace all the way to wherever we're retracing to, it's none of my concerns really. So I put my stop just slightly above break even, and that was pretty much it with this trade. And for those who probably think that we're tripping about this whole thingy, so this is me observing the inversion fair value gap level, expecting what? Bullishness and to come into play. And as you can see, these are the same annotations that I presented a couple of minutes back, and you can see the delivery was pretty much smooth, right? So with that being said, that will be that for this trade.